Okay, so I'm just going to share this with you all real quick. Me and a couple others are building a model that is going to incorporate various different data sets. So, for example, we're basing it around the short interest dates that are reported from the NYSE, which are the 15th of January, the 29th of January, the 12th of February, the 26th of February, 15th of March, 31st of March, 15th of April, 30th of April, 14th of May, 28th of May, 15th of June, 30th of June, 15th of July, 30th of July. With that, we're also measuring short interest for each of those days, the percent change from the last reporting period for those days, the days to cover for these days. The float I'm not including because it's the same throughout. The shares outstanding percentage we're going to include. We're also going to include the counterparties to the repo facility for each of these days on top of the repo amount. Then we also have dark pool short volume percentage, and the total volume for each of these days as well. And we also have put and call ratios that I haven't incorporated yet to the graph. And we have implied volatility as well for each of these days. So we're going to graph all of this stuff. And this is being done by Mr. Hi-Ho Silver and Frenchie and myself. We're just going to call him Frenchie for now. But anyways, I want you to take a look at what we've got so far. So basically, the orange bars here are your fails to deliver. And this blue line here is your repo amount, okay, on the top section. In the middle section, blue line is still your repo amount. Orange line is your number of counterparties. And then the purple line here is your percent shares outstanding of GameStop as far as your short interest, which is the amount of basically uncovered shorts. Now, while that is a metric that is not accurate, we can still use it as a benchmark for the overall model. And then down here on the third graph here, that's just your percent total short for each of those days that I mentioned as far as the short volume, and then the repo amount. So I would say that the normal stretch of time here is going to be between January and March 31st, because you see here we have a buildup of fails, and then in February we got really, really shorted, and then we ran up in March, up through about March 11th or so. Now, if you continue, if you cut it off past March, let's do this. Let's go ahead and take it and start from right here, or actually, better yet, right here. So we're going to start right here, and I'll paste this into PowerPoint so you can take a look at this after that period of time. Okay, let's see if I can do this where y'all can see it. Okay, so basically, this is starting in March now. Okay, so we have fails here, and then we have a slight bump, right? And then we see the counterparties jump up at the same time as well. Now, continuing on, it's apparent that whenever the fails are up, right, the repos seem to flatline. So whenever you see these orange bars here into play, repos it's not skyrocketing, but it's progressing up at a nice clean pace. And then like you see all these go away right about here, right? Like everything just disappears, and then you see the repo spike. And then we have more orange bars, and the repo trades kind of sideways. And then all of a sudden, repo demand dips at the same time the FTDs dip down. And that's at the same time the number of counterparties are at an all-time high. So the biggest dip that we have in the repo market this year happens to be the same period of time where we had the biggest jump from 45 counterparties to 90 counterparties between those reporting periods. So, and at the same time, you also had a slight bump in short volume. So these bars down here are short volume. So the feeling is that this is all correlated in some way. Like if the FTDs are down, then then that means the short volume is up. Because look, after July, we have nothing. This is the start of July right here. After the beginning of July, there's no FTDs. So where'd they go? Well, if you come back down here, and it's a little skewed, so it's not a straight down follow, but like July would be right here. So if you go and you move past this one, look, the short, the total amount of volume shorted each day is averaging to 65, 64%, up from 47% after the fails to deliver disappear. So we're at like 4 million as of the end of June, and then all of a sudden it goes to zero. So yeah, it seems to me like we're in that final stage here, because as you can see, the blue bar here, I don't know if you can see it, but it's right next to the orange one. That is your short interest. So as you can see, it's been going slightly down, except for one period, about the very beginning of May, or that period of May when we saw some action, right? And then ever since then, it keeps going down. The only time it went up was between May and June. And then as soon as June started, back to the downtrend, repo back to the uptrend, and FTDs are non-existent as of July. So interesting to me that if we look at this month and last month, we're sitting at all-time high for short volume. We're sitting at all-time low for short interest. We're sitting at basically all-time high for counterparties. And the repo at that time was at a record point as well. Basically, the closest other time that it had was that July point when we saw FTDs disappear. So something's going on here in this repo market. I know, or at least so far, that it's looking very correlated. So let me get the rest of this incorporated, like the put call ratio and the implied volatility with the options. And then I'll try to get the T21 cycles added in too. And I mean, yeah, look at these spikes here. The only time that you didn't get a repo spike with the counterparty spike was on the midway point between June and July. So very interesting. Let me know what y'all think. And again, Frenchie, you're a badass. Thank you for helping with this.